All right, welcome to the Nadex Application and Strategy Webinar Series. My name is Darrell Martin. I'm with ApexInvesting.com. Before we get started, of course, I got to put the standard disclosures. Trading involves risk, may not be suitable for everybody. Make sure you know what you're doing before you do it. This is unique information presented by Apex Investing. And then the other disclaimer here, futures, options, swaps, etc. involve risk. And again, all comes back to your own decisions when you make any investments. Everybody's, big boy and girl here. And so make sure, again, you know what you're doing before you do it. I may show you some examples. Past indicative, of course, is not indicative of future performance. And the big thing here is you'll notice that it does not state you can lose more than what's in your account. So that's one of the nice things about Nadex. You don't ever have to worry about margin calls. Now, some of you said that you do not have, before we started there, some of you said you do not have a Nadex demo account yet. And so I want to make sure that you know exactly where to get that set up and going. All you need to do is hop on over to nadex.com. So let's go to nadex.com, then under Trading, Demo Trading Account. So you should go over there right now, nadex.com, Trading, Demo Trading Account. And that'll allow you to go ahead and get that demo set up. I'll post a link here for you as well. It takes about 5 seconds. I mean, you should be able to do it right now. And just go on over there and look at, just type in your username, your first name, your last name, phone number, email address, all that fun stuff. Click apply for demo. They'll send you a password. So make sure you do have a valid email in there. They're going to send you a password, and it will get you going. Okay? And very fast. And then, of course, get your live account, going over to open an account up here at the top. It is $100 to fund a live account. That's a deposit, not a fee. You can deposit $100, you can deposit, $500, $1,000. You can, wire in as much as you want, whatever you want to do. Minimum deposit requirement's $100. The fees are 90 cents a contract, $9 capped, meaning that if you do one contract in an order, it's 90 cents. If you do 5, it's $4.50. If you do 10, it's 9. If you do 100 contracts in one order, it's $9. So that's a nice benefit of trading over on Nadex. If the contract expires in the money, then it'll be that flat 90 cents up to $9. If you close it early, 90 cents up to $9. If it expires out of the money without any value, then there is no fee. So that applies to both the binaries and the spreads, which are completely different products. All right, so once you got that, you can click log in. So go ahead and check your email right now if you just set up that demo and click log in. You'll be able to log in. It'll make life a lot easier as we're going through stuff if you can actually see some buttons and hit things as you're going. The other step you're going to do is hop on over to ApexInvesting.com. If you don't have one already, go ahead and grab a free account at ApexInvesting.com. There are hundreds of hours of free education. There's deviation levels, there's news trading plans, there's live Nadex binary scanners, live Nadex spread scanners, and all that is free for you to access. So make sure you get that. Also, you'll be able to access the recordings of these webinars and other webinars that we've done in the past. So go ahead and just click on the Get Free Access button, fill in the form, takes a few seconds to get going, okay? Then once you do that, you'll be able to log in. You'll be on the home page. When you go to the home page, a couple areas that you're going to want to know about right away. One of those is going to be our scanner, and we have tutorials on the scanner that you can watch as well. So the binary scanner and the spread scanner have tutorials. We actually had just now released. We're about to release out, we got it done, there it goes. So we got a spread scanner training course, and we have a binary scanner training course. So make sure to take those free courses. They have quizzes on them, and they'll help you walk through each step. If you don't have underlying data, like futures data, Forex data, I'm not talking about the indicative, I'm talking about the actual underlying data. Because that indicative only matters at expiration, okay? The binary is not priced on the indicative. The binary is priced on the actual underlying market. So if it's a euro-dollar binary, the pricing is based on the underlying market. The settlement is based on the official indicative. And the one on there is not the official one because it's web-lagged and all that. You're not going to get volume on there. There's going to be gaps in data. You really need to have a real charting platform. And I show you how to get it for free under this first course up here. So I highly recommend that you go through and you watch that right out of the gate and get your stuff all set up. If you're new to Nadex, check out the Nadex tutorial section. I show you how to get started, how to use the platform, how to use their mobile app on Android, iPhone, Windows. They basically all work the same. Little buttons are a little bit different, but it's pretty much the same thing. You can figure it out if you watch it. I also have sort of step-by-step tutorials on binaries and spreads. You can go through those. There's some bigger ones, and there's a lot of little 15-minute videos as well. As far as recordings, under webinar recordings, we're going to put them right here, and we're actually launching a new section right now inside of our forum. So if you go over to the trading question forum, you can go there and you can ask any and all questions that you have about Apex and about Nadex and about futures and Forex and how things work. And we have tons of stuff on here, different systems, how to read charts, money management, time management, like the schedule right there, psychology of trading, the sanity section, so all sorts of sections for you. But in the general forum, what we're doing is we're actually going to go in and we're going to start actually pushing all the webinars now. So we got newest webinars. We put the most recent 4 webinars in there. We got Nadex spread webinars, Nadex binary webinars. We got the Thursday webinars, elite webinars. And let's say you go to like Nadex binary webinars, it'll list them all out for you, and it actually has descriptions as well. So when you go click on it, you'll see it, and it has it on there with a short description at the bottom. So this will make them searchable in the forum. And I believe he went in, and they put in dates, so from when they actually happened. So now they're actually in a historical chronological order as well. And we're going to further break that down and make that even more and more user-friendly. Like we'll start putting them in by topic from there, put strangles and straddles and butterflies and all this other stuff together by system. But this is just to get it, searchable in the forum, get it chronologically ordered, give you an easy place to find the newest webinars. So where will the newest webinar be? It'll be under the general forum, and it'll be under the newest webinar section. Makes sense, right? We've also added a article section. If you haven't seen that, you can go over here to links and then articles. And these are articles I post on Yahoo Finance and Benzinga and Wall Street Journal, Market Watch, and other websites like that. And so lots of good articles on binaries and spreads, and just short 400-word, 500-word articles that are really quick and easy, but good, short, important little lessons. And if you can grab one of those a day, you'll pick up a lot of little tips and tricks really quick. Okay? And, all right, so, yeah, you definitely want to know this for that spot and that indicative. Scott says he learned that lesson today, so you want to know that difference. And it matters at expiration. It doesn't matter before, but at expiration, it matters a lot. Okay, so now that we got all that stuff out of the way, the one other thing I wanted to show you, of course, I talked already about the course on the scanner, the binary scanner and the spread scanner. You can access it right here. So we got everything you could possibly want relating to it over here. Even a binary expiration schedule is built in. We got news calendars, so like a news trading plan, like what news is coming out. Live feeds on news. We have different expectations, different trading plans on binaries and spreads on news. A lot of those are going to be neutral, surprisingly enough. A lot of them are not going to be straddles or strangles because over the years, as I've been trading these, I've actually learned the best way to trade them is a neutral style. So, anyways, check those out, and it'll help you in a lot of different ways. We'll talk about some of the ways you can incorporate that into your part-time trading tonight. All right, now that we got that done, let's talk about what the topic is. So tonight we're going to go into trading Nadex Binary Options part-time. So, a few of y'all out there trading part-time or nighttime or, a couple hours, basically a day is what you're looking for, I'm sure. You don't have time maybe to sit there for 8 hours. You don't want to sit there for 8 hours. I have traders that literally trade for an hour a day. I have traders that trade for 2 hours a day. We have 7,000 traders at Apex. We got people that trade the big trends, and they trade for hours on end, some that trade even longer, multiple days. So a lot of ways to trade, but you sort of want to know what you should focus on for nighttime trading or for just part-time trading, which may not be nighttime. Maybe you get up early in the morning. You live on the Pacific Coast, and you get up early and you trade for an hour or two before you go to work. That's what I used to do before I quit my day job. Is I got up early in the morning and I traded. So there are different advantages for trading at different times of the day or night. And there are different strategies that you're going to use, depending upon what you want to trade. And so we're going to talk about what markets can you trade at night. Obviously, you can trade, all of them during the day, but we'll talk about, or most of them. There's one that you can't really trade during the day. But we'll talk about what markets you can trade at night, some of the different trading strategies. We're talking about how to scalp with the binary option. What is a scalp? What does that mean? How do you do it? How do I do it? And there's different ways that you can do it. I'll show you a couple examples. We'll talk about some of the best instruments to scalp with, and we'll talk about news trading in the evening as well. And you can also, of course, do that in the morning, in the early morning hours, afternoon, depending upon when the news announcement comes out. And some of the best times of day to go in and scalp and do short-term trades. Now, the reason I'm using the term scalp usually means a small move. But I also want to sort of get you, in the frame of mind of that may mean a shorter term trade. And this is obvious, but if you're a part-time trader, and you only have a couple hours, whatever system you use is probably not going to be the one that's riding that trend for the next 4 hours, right? And just letting it take its time to unfold and develop. You're going to be looking for either quick, fast moves, or you're going to be looking for, contracts that expire within like the next, say, hour, like the current hour, next hour. You're probably not looking for contracts that take a long time to expire. And so you really want to keep that in mind, that not all systems and all strategies should be applied the same way all times, day or night. We talked about that a little bit last week. And, it doesn't make sense to try to trade the exact same trend trading strategy that you trade like on the market when it opens at 9:30 in the morning as you would at 4 o'clock in the afternoon, or as you would, 7 o'clock in the evening. Because there's more volume. You got Europe going full throttle. You got the U.S. opening up, going full throttle. There's going to be more orders. More orders means more movement. It doesn't mean you can't trade. It just means you're probably not going for those same trending strategies, because your trends just aren't going to be as big on a consistent basis. Does that make sense? You got it? Yeah. So obviously you need short-term trading strategies for trading a short amount of time. Perfect. That's it. Okay, so with that, we want to talk about a few different things. What markets can you trade at night? And then I'll go beyond what's on this PowerPoint right here. But you can trade any market you want to that's open. So let's look at what markets are open that you could take advantage of in the evening. Okay, and there's really only one that, or I guess there's a couple. You got corn and soybeans that are not going to be open in the evening. You also have the DAX and the FTSE will not be open until about 3 a.m. Okay? So now if you're trading past 3 a.m., then you get access to the DAX and FTSE till 4 o'clock the next day. But they're not going to be open at night. The Nikkei does open in the evening. If you've ever been wondering, what are the hours? What are the hours that you can trade? You can go over here to this Nadex information tab at the top. And it's really helpful. It has a lot of information on there, like when are rollovers to new futures contracts, what contracts should you be looking at, like what are all the future symbols, and what are the months. All of them are right there, okay? And then from there, you can go into looking at, links on Nadex, such as the contract specs. So let's say you did want to look at the stock indices. You can go over here, you can go down, find, say, rest of the world. You want to find out when, the FTSE does open. And it'll tell you, it opens from 3 a.m. to 4 p.m. It's when it starts trading, and you have 2-hour expiration starting at 3. So you got a 5 a.m., a 6, a 7, 8, 9, 10, 11, 12, and a 1 o'clock expiration. You got a 2 and a 3 o'clock expiration as well over on the DAX. So, Brian, I'm not sure what you're asking. Am I showing that on my screen? But right now I'm showing the contract specs for the FTSE and the DAX on my screen. Okay. So, let's see. Those are all Eastern time. Yep. So that's a great question. I'm glad you asked that. Every time listed on Nadex is Eastern time. And let me get you a link just in case you're having any kind of webinar issue. Give me 1 second. I'll open up a link for you and send it to you. That way you'll be able to access that. Here you go. So if you're having any issues, you might want to log out or log back in, but it is sharing through. I can see that it's sharing through right now. But there is the contact information for you to be able to contact GoToWebinar. You can call them and they'll answer the phone to say you're in a session whenever it prompts you. Okay? But you might just be able to close and reopen and get right back in. Okay. So, now that we got that covered, where to find those contracts and when they're trading, but, I'm just going over them with you right now to make it easy. One of the big ones is that a lot of people get real interested in, but you do have to usually pay for a data feed, and you're probably looking at $70 to $100 to get everything required to get that data, and that's the Nikkei 225. Cool contract, incredibly, a lot of volume, and it moves great. This is the Singapore exchange, the SGX. It is not the CME. Okay, so don't be looking at the CME, okay? Be looking at the SGX, the Singapore exchange. And this gives you the hours on it. And let's see here. If we scroll down to it, then we'll see that the hours are 7:45 to 2:25 a.m. So there is a international indice that is active and moving many times during that time period. So if you're looking for that, that is a choice. It's just understand you are going to be, a lot of times it's after you've got some other things going, because you do have other choices that, where you can get data for free. And then you can add that in, to your lineup as you progress. And so question says, is scalping day trading? No, that's not the exact same thing. Scalping is day trading, but day trading is not necessarily scalping, I guess would be the best way to put it. A day trade is a trade that you open and close on the same day. It could be a 30-point move. It could have lasted 22 hours. I mean, it could have lasted 23 hours, right? It's a day trade. A scalp is a short trade. It's usually a very short-term trade. It usually doesn't last an extremely long period of time. In addition to that, it is usually for a short market move, a small move. So you have a small move, usually in a short amount of time. That's what you're looking to capitalize on. The cool thing about the binary is they move very fast, and you have a lot of opportunities to make money in short amounts of time with short movements, which is what you need as a part-time trader, which is the focus of the webinar. Okay, so what to trade there. Let's look at what other markets are available for you. That's the international indices. Like I said, you won't see the ags until the day. Small cap takes a little bit longer to open up. It'll open up here at 8. But which ones are, you're going to get expirations at night. You're probably going to want nighttime expirations. Why? The main reason is the binary will move faster. Okay? Again, the binary will move faster the closer it is to expiration. So if I go over here and I choose, say, euro dollar, and just to try to, see if I can give you an example. There's 3,700. There's 3,700. There's 37. And there's 3,700. Okay? And what I want you to see on this is, okay, this has 19 hours left, and the 3,700 expiration for 3 p.m. tomorrow, 43.50. The one that expires at 11 a.m. with 15 hours versus 19, so there's 5 hours less, right? Or 4 hours less. The exact same price. 0 time decay is happening right here on the binary. Okay, which is pretty cool. There are reasons for doing that, but that'd be for longer-term trading, not for shorter-term trading. So it's not really going to change price because of time over at least the next 5 hours. Okay? Go a little bit deeper, and we're going to notice this goes from $44 to $36. So we are noticing exact same strike, 3,700, okay? And 3,700 is about $8 less. There's less time for it to move. And so it's moving a little bit faster, and time is having a bigger impact on it. We go, 4 more hours, and we're going to see it's $23, which is like almost half of what we were seeing from 8 hours previous. So it's moving a little faster. We go down to current, like here in the next few hours, it's $6.50. And here's a close one, 37.02 and a 37.03, $3. Okay, so you can see like the math. We went from a $43 binary down to a $3 binary with less time until expiration. Now, if I go, okay, well, I like the cheaper one. It moves faster, but it also has less time to move. So if you go in here and say, well, what if the market were to move up or down, let's just say 10 pips, okay? Check out how over here we're getting a nice return, about 1,150% return, because it goes from $3 to $37.50. This one goes from $3 to $50, so we get actually a little better return on that one in this case. Down here, $6, 742% return, goes to 50 as well. Okay, this one right here, 23 to 54.50, getting a much smaller return. Here, 36 to 53, only making $16. This one's going from 44 to 50, only making $6. So see how they move faster with that 10-pip move. You get a much larger move on a shorter term contract. Okay, does everybody understand that concept? Less time to expiration, binary will move faster as it gets closer to wherever the market is. Okay? If you've got any questions on that, then let me know. Otherwise, I'll just keep running on to the next topic here. And don't forget, I know some of you are brand new. That's why at the very beginning of the webinar, I say go to Education Nadex. Make sure you get those basics down, okay? So that way we're not wasting any of your time. How did I decide to say 10 pips? There was no reason for it, Scott. I was just giving you an example of what happens on a binary that has basically the same strike. If if the market were to move 10 pips. So it had nothing to do with me selecting or doing anything special. I'm just saying, if the market moved 10 pips, how would all of these contracts at the same strike, how fast would they move? Okay? Now, I may use 10 pips if it was actually a target that was 10 pips away. So I may do that. Now, there is an advantage here. Like we were talking about the 10 pips. If I look at the one that expires at 8 and the one that expires at 9, they both cost the exact same amount of money. This one is like one tick different, 3702 versus 3703. But being one tick different with that same cost, I'm actually making more money on the one that expires in an hour and 35 minutes because it's closer. It's just a tick, but one tick can make a massive difference. Okay? So, let me ask you a question. If you know binaries move faster the closer they get to expiration, but also the closer they are to where the market is, and you see an out-of-the-money binary that expires in 34 minutes and an out-of-the-money binary that expires in an hour and a half, and the one that expires in an hour and a half actually makes more if it moves, which one is better? The one that expires at 8 or 9? What's the better contract? If you were to choose that one. Yeah, 9 o'clock. So would it be safe to assume that you probably want more time as long as you can get the movement, the speed? If I can get the same or more movement with the same amount of risk and I can have more time for it to move, I want a further out expiration contract. Right? Because out of the money, it has to move, doesn't it? Like if it doesn't move at all, that thing can expire worthless. Yeah, it's only $3, but $3 adds up. When it becomes 10, 20, 100 contracts, when you do it every day, it can get pretty big. Okay? And usually not the contract I'm going to trade anyway. I'm just trying to give you an example. But looking at that contract, I'm like, I want as much time as I can get on an out-of-the-money binary with as much move, like as much profit on that move as I can get. Now, it doesn't mean I'm going to stay in it for the full 2 hours. Okay? This is if it moves right now. If it moves 10 pips, what would it be worth? So it doesn't necessarily mean I'm in the contract, for the next 2 hours. I'm a part-time trader. I don't plan on being in a trade for 2 hours or 4 hours or 8 hours. I can get in and I can get out before expiration. That's a very unique thing about Nadex if you are new, is you can exit before expiration. So I could put this trade on. Let me throw it on demo. Okay? Right there. So if I throw this trade on, well, let me put one that actually has some value on it because I can get out easier. And if I decide to get in this trade for $58 and I got in the contract, and then now I'm in, and I go up here, it'll pop up in my demo account, and I can set that little X right next to it, and I can close it. And let's say it moved up 10 or $20 or whatever, and I wanted to get out, then I can place my order, I can get out of the trade, and it will get me out of the trade. Okay? So I can enter and exit before expiration. Okay, so a good question comes up. What is an out-of-the-money binary? All right. So again, I'll say this again and again, and I don't mean it in a bad way. So I'm glad you're asking. But definitely go watch the basic Nadex videos under Education Nadex and read those articles because I talk a lot about all this. But an out-of-the-money binary is a binary that has to move to be profitable. When I buy a contract, when I buy a binary, I'm saying the statement is true, that the euro dollar will be at my most basic element, okay? Saying that the euro dollar will be greater than, in this case, 3703 at 8 o'clock. Well, currently it's less than 3703. It's currently priced at 36.92 or so, give it or take. So it's at 36.92 right now. So it's not greater than 3703, meaning it has to move up to become greater than 3703. It's out of the money. It needs to be greater than that price. It needs to be in the money. On a buy side means it's greater than by expiration. When that happens, my risk will basically be less than $50. Okay? Because there's a lower than a 50-50 probability that it'll expire in the money. One of the things that I talk about on other videos that I've covered is a binary when the underlying market is at the same price as the strike. Like if the euro dollar is at 3703, the binary contract itself would be worth how much? Who can tell me? I know we got some repeats on here. What would that binary be worth? Yeah, $50. Perfect, Jeff. You got it, Sam. So yeah, $50. Because if the euro dollar is at 3703, there's a 50-50 probability it'll be there in the next 5 minutes, in the next 5 hours, in the next 5 days. Okay? And so I'm able to use that knowledge in a lot of the strategies I teach you. I'm able to use that knowledge to go, hey, well, when it gets there, I can get out at 50. When it gets to, plus or minus bid-ask spread. Hence why you see the exit at $45 when it hits 37.02 up here at the top. Now, if it's in the money, that means it doesn't have to move. So if I go down here, and let's look at this contract, and the market is currently trading at, well, it's pretty much right there. Let's find one a little bit deeper. Let's find one that's just really deep in the money. Okay, this is sort of ridiculously deep in the money. Not a lot of movement expected at all in Eurodollar right now. So if the market's at 36.93 and this is at 36.80, the market's already greater than 36.80. So if the market doesn't move at all, since it's greater than 36.80, and just to help you out, I'll zoom in a little bit. So see how it says the market's at 36.93, Eurodollar's at 36.80. If it's already greater than that price, the Eurodollar could stay flat at 3 a.m. If it's still greater than 36.80, then I'll make my profit. If it moves down but stays greater than 36.80, I will make my profit. If it goes up, it'll continue to be greater than 36.80 and even more so, and I'll make my profit. So an in-the-money binary doesn't have to move to be profitable. And out of the money binary, the market does have to move for it to be profitable as of expiration. The same thing goes on the sell side, where I could sell a contract over here. If I sold it, and the market's at 36.93, and I said it'll be less than 36.80. So less than or equal to 36.80. So if I say that it'll be less than or equal to 36.80, I'm saying that if I sell it. Now, that's only if I hold it. I could sell it at 90 and buy it back. If the market dropped down to 36.80, what could I buy this binary for? How much? If it was at 36.80 and it fell down, the market's at 36.92 and it falls down to 36.80, what would this binary be worth? Yeah, $50. Remember, it's going to be worth 50 plus or minus some bid-ask spread. Okay, that's the bid is the left side. That's the price you sell at. Buy is the right side. That's the price you buy at. It'll be right at $50. Okay, and so I could sell it for $89, $90 and buy it back at 50. Okay, and I just put in there, put a sell order in, place the order, and then if I think it's going to go down, this is completely demo. Don't be duplicating this, and click on close ticket, open it up, and say, you know what, if it gets on down there to 36.80, I want you to close on down, buy back at, I could say 50. What I use is a rule called 57.43. Make sure you watch recent webinars if you don't know what that is, but it's basically me just accounting for bid-ask spread, and what if it hits like 36.82? I want to be able to still get filled and get out of the trade and take my profit. So if I sold it for $90 and I got filled at say 57, that's still a nice profit on a trade, right? That's basically a $10 risk. And if I, buy it back at 80, 70, 60, so about $33, hit place order. If the market does get down to that price, then it will. If the market moves down to pretty much 36.80, then I'll be able to get out of the trade at $57. Okay. So, but the market has to move because it's out of the money. Its risk is less than $50. A couple other basic rules. I try to not do these as much as I have to because I know we go over them so often. But if you buy, the price you buy for is your risk. Okay, so if you bought for the offer price, which is where you have to buy, that's your risk. If you sell, the price you sell for is your profit potential. So if I'm buying, the number I see is my risk. Notice that's $64 risk right there. And if I sell, and I sold for $60, then my profit potential would be 60. If I sold for 97, my profit potential would be 97. Okay, if I bought for 3, my risk would be 3, my profit potential would be 97 because it's always going to add up. That risk and reward always going to add up to $100. So that is one of the ways I know when to buy back on a sell. Is if I'm target. Now I have to have a reason to target that strike. So Brian brings up. So that's how you know when to buy back. If I'm targeting that price, if I think the market's going to move to that price, then that would be a good method to target, yes. If I think it's going to hit there by the time the expiration comes around. So I may only think it's going to move 5 ticks, right? So I may go in here and go, well, what if the market were to move 5 ticks instead of 10? Okay, and I hit apply. And it'll tell me basically what the price would be worth if it moved 5 ticks. And so I can go, well, let's see, this is the 36.80 at 3 a.m. If I go down here to 3 a.m., the 36.80 says it'll be worth, not that much actually, 91.50. Actually wouldn't be worth much of anything if it only moved 5 ticks and lose 50 cents on the trade. So what deal, what a good. Now down here, 5 ticks, you can still buy for 3 and sell for 23 or, whatever. So, but let's see, we're selling it though, right? So we're selling for 59.50. Let me look at the sell side. 3 a.m., 36.80, sell for 90. Okay, so on the sell side, if it goes down, wouldn't hurt you that much on the buy side. That's interesting. But on the sell side, $75. So if I thought it was only going to move down 5 ticks, then I could adjust my order and go, okay, I think it's only going to move 5 based on, I'll use magnet pricing and things like that. So I'm going to buy back at $75. And I just adjust my order. And now it's 75. Okay? It'll pop right up on there for you. So whatever price it is you think it's going to hit, and then I'll check it occasionally because that price can change as time goes by. Okay? But that's just a quick review on if you buy, what's in the money, if you buy, what's out of the money, if you sell, what's in the money, if you sell, what's out of the money. The simple rule is, in the money, risk is going to be greater than 50. Out of the money, risk can be less than 50. In the money, the market doesn't have to move for you to be profitable. Out of the money, market does have to move for you to be profitable. Okay? Now, we talked about some of the markets that were open, but I want to focus on FX. It's not that you can't trade the indices. It's not that you can't trade the metals and, the energies. It's just their contracts all are going to expire tomorrow. Like at, 1 o'clock, 125 on silver, 130 on gold. They line up with the pit hours if you ever wonder where their hours came from. Over on the indices here, they're going to be at 4:15. So the energies expire at 2:30. So you don't have any nighttime expirations. And, there's not usually a consistent large amount of movement at night anyway. So, I'm not saying there isn't any, but as far as consistency, you're going to see more consistency on currency because, Australia's open, Japan's open, England's open, Europe's open, stuff like that as they open up as the world turns. So, what contract can I trade? Well, you can trade anything you want, but I usually focus on FX at night. Specifically, I'll focus on these pairs right here. Right now, because here are the main reasons, is they have expirations every hour. Okay, they got it. They're 7 o'clock daily, then they got 8, 9, 10, 11, all the way till 5 o'clock the next day. They have expirations every single hour. So it really lets you, whatever your schedule is, you can focus on those. And I do like to have, during the day, I like to have multiple markets because you never know what's going to be moving. Ags, FX, indices, etc. But as far as at nighttime especially, those 5 markets have, like I said, expirations every single hour. So you'll see one in 22 minutes, an hour and 22 minutes, 3 hours and 22 minutes. So you're going to see a lot of expirations there. One of my favorite ones is going to be US yen because its strikes are only 5 ticks wide, 5 pips wide. Again, a pip or a tick is minimum increment move. So you're used to hearing this. If you don't know what that is, you're used to hearing the term cents. Stocks move in pennies, they move in cents. It's the minimum amount of movement that they'll have. They'll move from $100 and a cent to $100 and 2 cents, right? Well, since you're trading futures and Forex, you have different currency pairs, you have different measurements, how many bushels, 100 barrels of oil, etc. So every move has its own value, all this fun stuff. You don't have to worry about any of that with Nadex. It's really easy. But all you need to remember is, it has a minimum move. The move is what it's quoted in. So if it's quoted in like 101.51, 101.52, 0.53, 0.54. And notice, like I said on US yen, they're only 5 wide. So 46 to 51, 41 to 46, 36 to 41. So they're narrow. So I'm hoping that Nadex will soon be adding in even more strikes that will allow us to have more of them. What is the advantage? Why do you think I like the fact that they're so close together? How does that help me? And Greg just asked that question. That's perfect. So why is it good to have strikes so close? What's your guess? Okay. Let's see here. So we got moves less to make it profitable. It depends on what strike you have. You could have one that's 3 ticks away either way. It's just they're 10 ticks wide. So you have more choices. You're on the right track, Greg. Okay. Move fastest when at the money, but you could also at the money if they're 10 ticks wide, right? You could have a 10 tick wide one. The reason I like it, so going on, really building on all of those, is I usually am able to get at least 2, if not 3 different strikes that I have pricing. Meaning it's not like, let's look at euro dollar. Okay, there's probably like barely anything right now. Okay, see there's like 3 and 14, and then 97. Not a whole lot of choices there. If I want to do an in-the-money sell or an in-the-money buy, I don't really have a lot of choices. I can buy one for $14, which is like an $85 risk, or I can sell one for $12, which is like an $88 risk. Okay? So if I want to try to get out at 50, if it goes against me, obviously my risk reward is not that great. But if I go up here and I look at US yen, I could buy for 27, or maybe I buy for 71 for an in-the-money trade, and I could get out when it hits 50. Or I could sell for 62, get out if it hits 50, So being closer makes it easier for me to find an in-the-money and an out-of-the-money contract. And, there's nothing like, I got a trade, I got a signal, it's right in front of me, and there's nothing I can trade it on. So there's just not a good contract. Okay? So US yen is more likely to give me, as Jeff says, so more choices, is better. So you're more likely to have not only a choice of a contract, but a choice of a contract with premium in it, whether it be for an out-of-the-money one that's closer or an in-the-money one that has more premium. Okay? But you are a couple things, yeah. So Craig, you are right. When they're at the money, they move fastest. They start moving fast at about 20, and then they speed up from there up to 80, and then vice versa. It makes it easier for scalping, for getting out, because when they're really wide, they don't move as much. And even though 10 may be plenty wide during the day, at night, 10 is nothing, right? So market can, 10 is like, actually, I'm sorry, sort of vice versa. 10 ticks can be a massive move to a trader at night. So if we go over here, let's look at this just to give you an example, okay? And, what's the expected range? Here, let me get rid of that. Add this on real quick. And what we can see over here, one of the measurements I use, I actually calculate out what the expected movement is at any given point, any given hour in the day. And very important for nighttime, so you have proper expectations. But, the expected movement is 4 ticks right now. This hour is 4 ticks. Now, the next hour is going to pick up a little bit. So we actually plot out what the next hour's expectations are up front. And let me see here. I'll plot it from one more time. Back here, it has to be data for it to allow me to plot it. Okay, so right there. So we're going to go all the way up to a whopping 8 ticks. Okay? There's only 4 ticks of movement even expected in this hour from high to low. So far, we've only moved like 2. So you can see, trying to trade euro dollar is, and I know it's so popular. Everybody wants to trade euro dollar. But is that necessarily the best choice to trade euro dollar? Well, maybe not. Depends upon what's there. So, but you can see there's very little movement expected. This has nothing to do with like Apex systems or anybody else's systems. It's just how the markets work. So, would you want to be going in for like some strategy that's going for 20 or 30 pips when the expectation of the next hour is 4? Do you think that's a good idea? Is that a good plan? To go for a trend trading strategy when there's not any kind of trend expected? So, no. So, you want to go, what are the expectations? Okay, how can I possibly set myself up to have the best possible chance of being profitable on that trade? And it's not by picking the low-risk $3 contract that is 13 pips out of the money, right? So, if I only expect the market to move 4, then going for a trade where there's an expectation of 13, that's, more than 3 times the amount of the movement expectation. And you can see it really stays inside these expectations quite a bit. So every once in a while it'll break out. That's usually when we get volume. So if I put expected volume on here, you'll probably see that volume was picking up right then. And we had more volume than expected. And therefore, see, like there's a lot of volume. This little orange line is the expected volume. The blue line is the actual volume. So see as like there's a whole bunch of volume happening right around 10:30, started picking up more and more and more, and it broke out of that expected range. Then all of a sudden it dropped back off. Everything went right back into the expectations. And right now, I mean, we're basically on par pretty much with expected volume or less than. So I see nothing telling me the market even has a remote possibility at this point of breaking out of the expected 4-tick move from high to low. Okay? So the 4 pips is actually for the current hour. So for the next hour, what I did was I just measured. I just took the measurement tool right here. And I measured from this to the bottom of this channel over here, which shows me 8. So just to see what the next hour was. Also, you can export it, which is sort of helpful. You can export like what's the expected move. It'll give you the expected move by hour. So if we go, today is what, Monday, and then we go over here to the evening, and it'll say, okay, right there, we got 4 pips, and it's going to go over to the next hour. So during the 7 o'clock hour, so this is the beginning time, not the end time, but for the 7 o'clock hour, the move is 4 pips, and then the next hour is 8, then 7, 5, 3, 4, 5, 7, 6, 9. It picks up a little bit. Now we start picking up. See, 12 at 2 a.m., 16, 19, 16, 21. See, this is when I'm expecting movement. So I can also use this as a part-time trader. It's a very helpful tool to allow you to figure out, when is more movement expected? When is movement not expected? Therefore, what kind of strategy should I be trying to do when there's not movement? What kind of strategy should I be trying to do when there is movement? Okay? Yeah, as far as how to read charts, we have all that education for free, Robert, over on our site. So if you just go to education, there's a whole section of courses. One of them is just on like indicator template trainings. And then we have like how we apply them, inside different courses. But all these courses are free for you to review and see how they work. Okay? So right there. All right? Just free inside the Apex area. All the education is free. Yep. Okay. So I want to have proper expectations. I want to think about what time of day or night is it. And I want to make sure I pick a system or strategy that's also going to work with my schedule. If I don't have 4 hours to sit there and babysit a trade, then I need to make sure I have a trade that's going to expire before I got to leave. Okay? So if I know, what, my kids are getting home, my wife's getting home, whatever, I got to go to work, whatever the thing is that your schedule is driving, your life there, then how can you find the right ones to work for you? Now, if you're trading at night, and let's say there's no premium, like it's wretched, it's really small, okay? And let's just go over here to say US yen. Let's pull US yen up. We were talking about that being a favorite. Somebody asked what are the 5 instruments again? The 5 that are at night every hour are Aussie dollar, Euro dollar, Pound dollar, US yen, and Euro yen. Okay, so Aussie dollar, Euro dollar, Pound dollar, US yen, and Euro yen. Okay, and if you just select them, you'll see. Because like, watch this. If I select Pound yen, I'll see that the next expiration is at 11 o'clock at night. There's not one here in the next 20 minutes. If I select US yen, I'll see it right there. If you want to schedule, I know we still need to update this, but we do have a expiration schedule over here. Right there. There's a binary expiration. It's a big, long menu. Gotta clean that up. But binary expiration schedule, if you go to that page, it actually shows you what all the expirations are. We need to add Euro yen to it. And let me see here if I can send that over right now. I'll get that done for you. Okay? All right. So, again, that's just right under the scanner where we have the expiration schedule. Okay? Now, Lorenzo says, so should I use out of the money for large movements and in the money for small movements? Yes, in the money is better for small movements in the sense of it doesn't have to move, right? But there are plenty of times. One of the trades we have is called Expiration Trend Collection. It's a trade I do like in the last 15 minutes of every hour. He's great for part-time trading. Actually, one of the traders I know, he owns a full-time business, has a fishing charter, and he just trades like 1, maybe 2 hours. And when I say hours, probably like 30-minute periods in a day. And that's all he does. It's just expiration trend or premium collection. And I may go in there to look for a premium collection trade for a small move, but I may see that there's a good price contract that's just a few ticks away. So I may decide to do an out-of-the-money contract if the price lines up well for me. Like I may decide not to do it in the money because then I don't have to use a stop loss. I did a trade on the air the other day on the radio show where we went in, we sold it. I want to say it was like $11 risk, and we made $12 a contract. What didn't think huge, but it's still 100% return. And it was just doing like a spike striker. It's on one of the shows from last week, but that was an out of the money contract. So you can use out of the money contracts for small moves, but you need to have a proper expectation on how far is it going to move. I don't want an out of the money contract that's 10 ticks away if my movement expectation is only 4, right? And I want to go, well, what would that be worth if it actually moved that far? Do I have enough time for it to move? In this case, there was enough movement possibility built into the expectations, and it actually only didn't move like 2 or 3 ticks, and it would have went from like $11. I think I want to say I sold it for $89 or something like that. And I put in a buyback like around 75, 77. I can't remember the exact numbers. I can pull it up for you. But anyway, so as an example, I mean, I did use an out of the money there. So you can also use out of the money for small moves. Just don't use an out of the money that's really far away. And that's probably one of the biggest tips I can give you that I've learned is, you go over here and let's say you pick up Eurodollar, and there is just nothing there, okay? Well, is there? Let's see. It's priced at $12.75, and the market's at 36.91. That's 2 ticks. We're not talking some massive move here, okay? Just a couple ticks, and that thing's going to be worth $50. Just 2. Well, we've only moved 2 of the expected 4, okay? So you don't need a big move, and you can make a massive return. And that's not holding it till expiration. That's just moving up a couple ticks. So, don't, a lot of times I talk about it in the money binary because it doesn't have to move. And does that help your probability if it doesn't have to move? Do you think that's probably going to increase your probability of being profitable if the market doesn't have to move? What do you think? Yeah, so if the market doesn't have to move at all, do you have an increased probability of success on the trade? At least as far as expiring in the money. If it's already in the money, yeah. But you also have more risk, right? Like if I buy a $70 or $80 contract, I have more risk. So what if I could buy a $12 contract and have less risk? My probability is lower because it is going to have to move, okay? Like at least a couple ticks. And if it does move, then I have a really nice profit. That profit actually is large enough to cover multiple losses, right? If I bought it at 11, let's just say I sold it at 43. Well, I mean, that would cover, that's, $33. $32 right there. That'd basically cover about 3 losses in one trade. So, don't just rule out in the money because they're out of the money and because they're cheap. I'm more likely to rule them out because they're out of the money and they're really far away. And they're further away than I expect the market to move. And most people will gravitate to them because they see that really low risk and they're all excited. They're like, oh, wow, it's only $3. It's like, yeah, but the market has, there's no expectation it's going to go there. So why would you even waste your money on it? So this actually has a possibility. Like I said, we get a couple ticks. I mean, I can go in, I could buy this contract as a demo, okay? Buy the contract, put it on, place an order right there, and then go up here. Contract gets filled. Like I said, a take profit to sell the thing at 43. Now, this is not a trading system. This is just explaining the dynamics to you. I wouldn't just randomly be buying stuff. So right there, 43. That's so cheap, I could even decide to go in and go, well, now 36.93 is really close. Look at this, 36.83. Now that's $3 risk, but that's pretty far away. I really have no expectation for it to go down there at all. Okay, that's 7, 8 ticks away. So probably not the trade I want. I might go, well, let's look at the next expiration, see if I can maybe sell one below the market. Well, there's 36.80. That's even further away. There's 36.82. Well, they're both $97. If I was going to do one, I'd probably choose that one. But it's still too far away. So, out of the money can be really good. I prefer, if I can get an out of the money a couple ticks away, I love that over an in the money trade. No stop loss, low risk, high payout. You know, I'm not holding it, but highly prefer it. But not that often do you get them that cheap, that close. But if you're not looking, you'll never get them. So you always want to look, even when you're doing that in the money strategy. You want to go, is there an out of the money that might be really good? Or maybe I'll do both. Maybe I'll collect 30 on the in the money, and I'll pay $10 on the out of the money. And that happens too. It's called a double binary strategy. So, but that would be an example. Okay? And yeah, I'll go over some specific systems for you in a minute. These aren't really systems right now. The first thing you have to understand about binaries is what are they? How do they move? How do they work? Because you're going to have to choose whatever system we look at. Okay? You're going to have to choose what is the best contract when you do get a trade. So, for instance, like right here, I had a potential buy, it didn't trigger. Here, I had a potential sell, it didn't trigger. I mean, I got a lot of potentials going on that aren't triggering. But a lot of range-bound movement happening at the moment. So I'll go over some systems with you in a little bit. Okay, so now I don't use the indicative. Okay, I'm not using the indicative to place my trades. I'm actually looking at the underlying market. The indicative is an average of the last 25 on Forex non-sequential mid-quotes with the average of the middle 15 of those 25. So the last 25 non-sequential mid-quotes, average of the middle 15. That's not what's driving the price of that binary contract. You should not be trading based on the indicative. You should be trading based on the underlying market. Settlement is what the indicative is about. They put it on there as a helpful guide, as a quick resource, as something you can get a general ballpark of where the market's at, but that should not be what you're trading off of. If you are, you're at a serious disadvantage. You're placing yourself at that disadvantage. And again, we show you how to get that information for free. Paul asks, so would a hedge be good if there is an important news announcement coming out? It could be, or it could be a waste of money, right? I mean, if I put on a $10 trade, how much is a hedge going to cost me? If the hedge is going to cost me $10, then I just doubled my risk on the trade. So it depends on what your trade is. Is the insurance worth the cost? You know, it's like when you go to Best Buy and you buy a $100 or buy a $25, we'll say a $25 movie, and they're like, yeah, for $10, we'll insure that movie for you for 3 years. And you're like, 3 years, it'll all be digital anyway, so it doesn't matter. So it's not worth $10. The insurance is too expensive. My house, okay, pay a couple $1,000s a year. If it burns down, you'll, reimburse me so I can build a new one. That's worth it. So make sure your hedge, your insurance is worth the cost. Don't just buy it just because you don't want to lose. Otherwise you could be just throwing good money after bad. So if it's low and there's a reason, and you have a reason on that news expectation to think it's going to move, then that could be good. But like tonight, we only had one news trade. We had the yen Tonkin report coming out. The largest expected movement we have is 35 pips. I mean, largest. Okay, and now it can be larger than that, of course. But the last 10 out of 12 have been less than 35 pips. Less than. So it doesn't mean we're not expecting 35. We're expecting it to actually not be 35. We're expecting it to be smaller than maybe 5, maybe 10, maybe 20. But we're not expecting a massive move. Okay? So, probably I need to know exactly what you want an example of to give you an example. But I will be happy to give you one. Okay, so we went through what instruments are open at night. We went through the hourly and the daily FX. Remember, those 5 are open every hour, but all of them are open they have a 7 o'clock and 11 o'clock, a 7 a.m. and 11 a.m., 3 p.m. They have expirations around the clock. 3 a.m., like 7, 11, and 3 a.m. and p.m. on all of them. So don't forget those at 7 o'clock. You can use all the FX pairs. At 11 p.m., you can use all the FX pairs. Maybe you're an early morning trader. You got all of them again at 7 a.m. So plus you add the other 5 that are every hour. Cool. All right, so you got the example. Good. All right, so let's see here. So on the topic of news that we're talking about right now, always be aware of the news. It doesn't mean you have to be a news trader, but you should be aware of it, right? If I'm in a long trade and I have no idea that a report's about to come out, let's see, like tonight, we go down here, We got the token release coming out now. Okay? And usually there's little to no movement on it. We don't expect anything more than 35 pips, and as you can see, nothing's happening. And so that releases out, and nothing's happening at all. And we did a neutral-based trade. If there was enough premium, there was no premium in the market, so it wasn't even a great neutral trade at that point. But there's just the market. It might as well not even have came out. Okay, but let's say that the market did move that 35 pips. Probably a good idea to be aware of that, because if it moves that expectation, like that, that largest expectation that we have on a consistent basis at least, probably a good chance it's not going to continue to move. It's going to be flat after that. It also tells you don't expect big moves between like 6 and 11 o'clock on euro dollar, because when this report comes out, it doesn't move. I mean, US yen, I'm sorry. So, but it'll tell you different expectations on different currency pairs, on different announcements. For tomorrow, we got the Aussie cash rate coming out tonight. We got the pound manufacturing PMI coming out. We got Aussie trade balance coming out. We have the US ISM manufacturing coming out. So there's a lot of different reports coming out. Heidi, I don't have a specific template uploaded. I just added the indicators to my chart. I will load some templates up, though. So the expected movement is a high to low expectation. So we give you, I'm looking at several things. We're looking at what's the movement from high to low. So we did get a little bit of movement on US yen. Not much, which if we look at this right here, this is basically the high to low. So how far from the lowest point to the highest point in this hour did it move? The expectation is that it would move 6 ticks, and it moved 5. So that was the most it moved. So it's the high to the low. It's not upper. It's not a directional indicator. It's a how far do you expect it to move. So if it does move 6 ticks, we probably expect it to turn around, right? So we have one of our trades is called a boomerang, a phase 2 boomerang, and it's all based on that expectation of it moves and then it turns around. So pretty simple trade you can do. Okay, so right there, let's see what else we got. So first thing, always check your news plan. Know what the expectations are. Now you can do strangles, but there are some challenges with strangles. So let me explain what a strangle is to you first, for those of you who don't know. Okay, a strangle is where you buy a binary above and sell a binary below the market. Okay. And the market is extremely efficient. Okay, these are priced very well. Okay, this Nadex isn't pricing them. Other traders and market makers are impacting the price, and they are priced extremely accurate, which means that expected move is built in. Okay, and so if we go and look at this, like it says in the next hour, let's look at what is the expectation for the next hour. The next hour we expect maybe 7 ticks of movement. And so what they've done is it's pretty much $50. Now you actually make money if it actually expired up there, but 10 ticks wide, it's going to cost you about 45, almost $50. It'd have to move up or down, say 5 ticks from where it's at right now, because it's right in the center. It's at like 101.31, right there, 101.30. So it's right there in the center. You see how we're right at 50, okay? And remember I said it's priced based on the underlying market, okay? Not the indicative there. But anyway, so it's right in the center of it, and so it'd have to be like 101.36 or 101.26. So let me show you on a chart, what would a strangle look like? So if I went in here and I bought a contract, I'd be buying one up here above 101.36 or down here below 101.26. Let's mark that on the chart. Okay. Now, if you did that, and you paid about $20 for the one on the top, and about $20 risk on this one, $25 risk, we'll say combined $50. So if I had $25 risk on the upper one and $25 risk on the lower one. Now, if it expired above or below one of those levels, how much would I make? Who can tell me how much I would make if it expired above 101.36 or below 101.26? What would be my profit on that trade? . if anybody can get this one. There we go. Okay. Good. Be $50. Yeah, $50. Because remember, you're going to lose $25 on one side. Okay? And you're going to make $75 on the other. So if it expired below it, if I sold this for $75, I'd make $75, but the one that I bought above it, $25, I'd lose, right? So I lost $25, I made $75, I netted $50. So good job, Kevin. First person to get it right. Now, if I bought a $25 one and it went up and I made $75 because it expired above it, okay, and I lost $25 in the lower one, I'd make $50 if it went up. So Darby, you'd be right on the 500 if you did 10 of them. Okay? But what if I closed it right when it hit the strike? If I closed it for 50, be about at what? It's going to make 25, pretty much be close to losing about 25, probably 15, 20 of it. Pretty close to break even. Yeah. So they priced it to where if the market basically moved up or down 5 ticks, which is pretty much right around the expected move, then I'd be break even on the trade. Okay? So you really want to have a reason to believe a market's really going to move if you're ever going to do a strangle. We're going to be willing to hold that thing to expiration. And that's one of the reasons why, I showed you the high to low, which is like right here, where I measure, what's the expectation of movement, like that section right there, 7 ticks. But I also measure what's the close to close. So what's this close to the end of the hour's close? Let me replot that. But we got about 3 ticks on it. So if I measure from like right here where the market, and then I go up over here, about 3 ticks. So that means what we actually expect to happen in this specific hour on this specific instrument is for the market at most to move about 7 ticks from the open to the high or low, the high to the low, and then come back and expire about 3 ticks away from where it was before. So, meaning at the beginning of the hour, like where it was at 8 o'clock, we expect the market to finish probably about 3 ticks higher or lower. It may go up 7 ticks, but we expect it to come on back down a few, which isn't good for our strangle, right? Because if we close it out, we don't make anything. If we leave it on, it's probably going to come back and we're probably going to lose. So I probably don't want to do a breakout trade on a strangle unless I have a really good expectation for some reason that the market's going to take off. Now, what might be a reason that I may think the market's going to take off? What would be a good reason for that? Yeah, news would be about the only reason. So that's perfect, Scott. Like this Thursday, we're going to have an event that I actually looked at in the last 5 years. I've never seen this happen before. It's happening this Thursday. The non-farm payroll is coming out at the exact same time as the European News Conference on the European interest rate release. Both happening at 8:30 this Thursday because we have a holiday Friday. And so they're going to release unemployment rate and they're going to release non-farm payroll the exact same time that the European announcement comes out. I expect the market to move. So I'm either going to be looking for a strangle or I'll be looking for a neutral strategy like an iron condor if there's a lot of premium built in. But I definitely expect some movement. So if I could find a really cheap strangle like that, I'd be all over it. Okay? So you just got to look at what is the expectation of movement. It's a lot about, binaries are a lot about expectations. Where is it going to go to? How far is it going to move? How long is it going to take? Because that's what you're saying. This will expire greater than this by this time. So you are saying how far you think it's going to move and by what time it's going to do it. So you really need to have proper expectations when you're trading binary contracts. Now, you don't have to do that. You could trade spreads. I love the spreads. Okay, they're more like trading Forex anyway. So spreads are definitely an option. We're focusing on binaries tonight. I have a lot of training on spreads. But I just want you to understand that binaries are so easy to understand. And they're not incredibly complex to trade, except for the fact that you do need to have proper expectations. Otherwise, you just wonder why it keeps missing your mark by 5 ticks. Well, because it only moves 5 and you went for 10. Okay? Let's see here. So beware of expectations of movements, beware of extremes, all that stuff with news. Now, there are a lot of ways to trade, obviously any market, period. So let's look at a couple of them. Different ways that I'll trade them, different ways that you can trade them. But there's a lot of ways to trade them. Let's see here. Going really slow right there. See if we can find something over on, let's load up a US yen. So what I have here is I'm using tick-based bars. I call them diagnostic bars. And they're basically looking, instead of measuring time, they're measuring movement. So every time like the market moves 6 ticks from open to close, then it'll make a new bar. And I use that so I can see how fast it's moving, because you know how stuff can just like oscillate forever. Nothing's really happening, and then it just messes up all of your charts. So I call this is a momentum scalp trade. It's one of many trades that I do. And we could load up maybe a couple of them and see what all we get. But and again, it doesn't matter really what time frame you're trading. You can take advantage of this. So, what time of day or night you're trading, you can take advantage of this. It's a matter of finding the right contract for you. We'll load up maybe what are some of the markets that y'all like to trade, so I can open up some specific charts on those markets. So we got Aussie, okay, like the Aussie. We'll load that up. Good. Okay, so here we go. So here's we got US yen, we got Euro yen, we got Aussie dollar. Okay, so and if you have any indices you want me to look at, we can pull those up as well, just as examples. But like right here, and I'll usually use smaller bars, especially at night. Even if I use like 14 ticks during the day or something like that, I'll use smaller because I don't expect as much movement, right? So a trade I call momentum scalp. This is actually several trades in one right here. But is if the volume, and just let me shrink a bunch of stuff so we can just focus. Get way down here and let's focus on volume and movement. Okay? So if the bar closes down, it's pretty simple. Bar closes down, and we'll just zoom right in on that bar. Right here. So the bar closed down, and the volume exceeded expectations. So more volume than we thought was going to happen during that bar's period of time. Okay? And that's right there at the end of the bar. So the last 4 minutes of that bar, we have some strong volume coming in, more than we would expect. Then I'll sell if it breaks the low. Very simple. Okay? What will I sell? Well, ideally I'll sell it in the money. I may choose an out of the money if it's really cheap. Now remember we talked about US yen only being 5 ticks wide? There could easily be an expiration, that's only a couple ticks away. Alright? So, you can go in there and find really, really small, charts and look for small movements. Now, I may have to go for even less. Like right now, we haven't even had that much movement in the entire, since 11 o'clock, there hadn't been a new bar formed. Okay, because there's been that little movement on the US yen, which means a whole lot of really good premium collection trades. And we're going to be talking about those, by the way. We're going to be going into butterflies, which are awesome at night. We're going to go into those next week in detail. But I can even go smaller. I can go down here and try to bring this thing down to 4 ticks, just trying to give me something. Okay? The number above and the number below, right there, all that is telling me basically at what price will a new bar be formed. Because it has to move 6 ticks from the open for a new bar to be formed. But very simple strategy. If the market closes up and volume exceeds expectations, I'll buy if the next bar breaks the high. I'll usually look at an in-the-money binary. So that gave me a few more, not a whole lot more, but a few more trades. And if it closes below it, then I'll sell. So like right here we got, it's closing down, it's exceeding volume, sell, all the way in. Just sold for the hour. If you don't sold an in-the-money binary, it's profitable. If you sold an out-of-the-money binary, it was probably profitable because you're at 36, so you probably had it, at least a 30, and it came on right down to 30 where you could have taken profit. But multiple entries, it could have even just been a couple ticks away. Go down here, there's another one in the money, very clean. This one, well, there's been nothing happening. So it's been very, very, very quiet overall. And you can get smaller and smaller. I've seen traders go down to 2-tick bars. I mean, there's some crazy stuff you can do. But you can notice there's definitely a lot more movement at certain times of day or night. And it's important to understand that you're going for that premium collection when the market's not moving at all. And it's been really quiet lately, right? With summertime, we got holiday week. So add all that together, things start slowing down. But the idea here is that you can sit down, find trades quickly, find them within like 1 hour. You open up whatever instruments you can trade, and then you just look for trades on those markets. And then you're end of the hour, either you got several trades off or you didn't, but you didn't spend 8 hours doing it. Okay, and so I may go over here and maybe I'll do like one of my favorite trades. I'll do is called Spike Striker. I talked about that last week, and that's just volume spikes in the market. So I'll go like to pound dollar. I'll look at a 5-minute chart. And then just load up this template. Makes it a lot easier to manually add everything on. And then I'll also look for volume spikes. And if I get volume spikes, then I just have it. The simple, there's out of the money, there's in the money. So there's obviously simple out of the money trades, simple in the money trades. But here's all I do. When I get a spike, then I look for the market to break the high of the bar after that. So right here, okay, we got a 5-minute spike to go long. Here's the bar after that. It goes long. It breaks the high. You have an in the money trade. Here's one we're looking for a break. Doesn't get it. I mean, it's so flat right now. We're not getting anything. So what could you trade right now? This is so flat. I want to bring this up because I know this can be like one of those frustrating things as a trader. What could you trade right now when the markets are doing nothing? What is something you could focus on? Out of all the strategies I've taught. Some of y'all know the answer, some don't. That's why I'm bringing it up. Yeah, premium collection. You don't know if it's going to go up or down, do you? Right? You have no idea? Is that accurate? So, what premium collection strategy specifically? Because I think this is going to be one that we're really going to need to do soon. So we'll do it next week. Okay? It's butterflies. And that's the opposite of a strangle. Now, if you want to go to our website, we talk about it. We'll go into it in detail next Monday for you. But that's like buying a strike down here and selling a strike up here at the top of the hour, maybe even 2 hours early. Okay? And just literally collecting premium. And so instead of being the guy that buys the strangle and it expires out of the money, you get to be the trader who buys both of the in the money trades. If it doesn't move up, you make money. If it doesn't move down, you make money. If it stays flat, you make money. If it moves up a little bit, you can make money. If it moves down a little bit, you can make money. But as long as it doesn't move up or down a lot, and the risk reward is phenomenal. And I think you'll like the ratio of how your trades turn out as well, as far as profitable versus not profitable. But I'll show you how to do that. And that's all using expected ranges. And even focusing more on volume and close to close. But a lot of premium collection, I mean, it's been so flat lately. You need something to do when there's nothing happening. Because even these trades, as good as they are, they're not even triggering off. Now, some traders I know will go in and they'll get that spike and they'll just do it. They're like, you know what, I can get it 5 ticks away, I'm just going to go for it. So, and they'll just grab it. And that's not horrible. That's just, obviously, you want to have a little experience if you're doing that. But so I got the spike strikers where I look at when there's a spike and I'll fade the spike. So if it's a spike below, I'll buy. If it's a spike above, I'll sell. And those are morning, noon, night. And there's a sell right there. That one triggered off, broke the low. So that's a perfect spike striker right there that happened today. You could have done the 5 o'clock expiration on pound dollar right there. And what happened was, just to walk you through it, you got a spike right here. Okay, it was confirmed at the end of this bar. And then we waited for it to break the low of the bar, which it did right there, where it broke the low of this bar. And we sold a in the money binary contract. So say you're selling 7115 or something, because that's where it opened at, so it should be pretty easy to get one there. And then it moved on down. I mean, very, very simple premium collection trade, nothing massive. This one we had a spike above, confirmed there, but did not break the low. So we didn't get in. We're glad we didn't. Moved on up. Spike below did not break the high. We didn't get in. So that's why it's good to have multiple markets you can watch. There's alerts on these now too, which are helpful. So sort of just a way to watch it. Yeah, huge spike. And then so you can get some nice spikes, but you just look for those spikes and find them. They can happen, like I said, night, day, whatever, and you never know what's going to give it to you. So it's really good to have a lot of charts open at once. Like there's a spike right there that worked out perfect. Went down, broke up, long trade. Like I said, some traders will wait on the break, which I think is wise. Some will just hop in. You'll get a lot more trades than traders who don't, which will make you more money. But when you lose, obviously, you're going to be a little more upset. I like to trade patient and find the best one. Some traders they really want to trade. So they'll go, well, you know what, I can get 10 more trades. Yeah, 2 of those lose, but, I got 8 more that were profitable. So to me, it was worth it. So you got to know your stats. How good are you at calling the market? So, there's a short that worked out well. There's a short that worked out. There's a short that worked out as well. So 3 in a row. Those are all night. That's 7 o'clock, 8 o'clock, 9 o'clock, right there. Just boom, boom, boom. Less than 1 hour trades. Looking at Euro Yen. I know somebody said Euro Yen. We'll pull that up. And Aussie Dollar. We'll pull those up. See what they look like. And I like the yen pairs just because I'm going to change my template. They usually have more volatility, so it's across the board. And there's not been a lot of volatility, so all the extra volatility you can get helps. But here's Aussie Dollar. And so there's a sell right there that worked out well this evening, 8 o'clock sell. For 5 minute, we had a spike, and then it broke the low. That's a short. Boom, right there. So that happened while we've been on the webinar. And there's another spike, broke the low. If you're in the money, it was close, but it was profitable. There's one below, did not break the high, no trade. Let's see, on the 10-minute one, we had a long, so moved up. 5 ticks, that's enough to take your profit. We always take our profits. Let's see here. We can just keep going and going and going. But there's Aussie, Euro Yen. You'll get that one. And this has probably been my trade of choice lately, just because the premium has been so low. We're not even getting the movements to hit all the ranges we want. And you want to have different trades for different times, different seasons, so different plays. So here is your Euro Yen. Not usually, honestly, my favorite pair. I love the pound yen, but not a big Euro Yen fan. But we'll look at it and see. Short does not break the high. No entry. Not as many spikes on it. Let's see here. Right there. 10 minutes after it does break it, expires in the money. So not as many though. Let's see here. Trying to go through and see if we see any more. There's a short. 10 minutes, so 1, 2 does break the low and expires down in the money. Not a lot of trades, but they're there. But you can open up multiple ones. Okay? So Tony asked a question. Can you explain the difference for me between an iron condor and a straddle? Well, yes, but just to make a little side note for you, I'll go into it a little bit more next week because we're going to talk about those range-bound strategies, but those are spread strategies. Okay, they're not binary. So tonight we're really focusing on binary strategies. But a quick summary for you on an iron condor is a neutral strategy. You're buying the spread below and you're selling the spread above. Okay? So you're basically saying it's going to stay in between a range. So I'd go down here and say I'd buy this contract and I'd sell. Get rid of my filters. Okay, so yes, I'd buy that contract and say sell, if I can find one. There's not a good one there. Let's see here. Got that one and sell that one there. Well, that's not even great, but that'd be an example. Basically, it's going to look like this. You're going to have a smaller profit margin, but I have a whole section under the news calendar. If you look over like on usually the first day of the month, so like June 1st, you'll see a whole iron condor section where I talk about iron condors. Straddles are the opposite. So it's where I'm going to go in and maybe like buy this contract and sell this contract. Okay, so I'm looking for a big move on an iron condor. I'm looking for more of a neutral range bound sorry, I'm looking for a big move on a straddle where I buy the spread above. So I buy this one, and I sell the spread below where the market is. And I'm going to flip that around on an iron condor where I'm going to look for a range-bound move where I buy the spread below and I sell the spread above. So one of them, the market has to move, one of them doesn't. So guess which one is usually more profitable? Or like profitable more often, I guess would be a way to put it. It would be a range-bound strategy because you're the premium collector versus the premium payer. Okay, so we talked about momentum trades. We got some examples up of different markets. We talked about spike strikers. Premium collection is in the last 10 minutes when it's happening. You may have to get really small in your tick sizes, okay? Notice we are having, right now, we're having momentum scalps right now. So the market's moving on up. It exceeded expectations. Right here, we get a buy. Going into a new hour. We still got another one right there. So on the new hour that we have at the moment, it's happening and moving on up. How far do we expect it to move? Well, basically up here to 101.37. So that'd be about the highest we would expect it to move. And it's got within like a tick or two of that already. So, but we're pushing right up on there at this moment. So it's working on it, and the volume again is exceeding expectations. Okay, so let me see what else we got. We got out of the money and in the money. We talked about, when to look for out of the money. When there's no good in the money, check out the out of the monies. And even when there is a good in the money, sometimes check out the out of the monies. That's where the scanner comes in to let you see stuff. We got EPC, which is expiration premium collection. ETC, which is expiration trend collection. It's just doing a trade in the last 15 minutes. Premium collections in the money, trend collections out of the money. We got the spike striker. If you want to learn more about that strategy, we've got the course free to take over here. Right under education. We just uploaded it from a training we did last week. But education and then spike striker training system. Okay? Has quizzes and everything for you. And then, reminders, different strategies work at different times of the day. Just trying to go through. I got a whole bunch of little notes I wanted to make sure I went over with you. We went over momentum scalps. We went over diagnostic bars. Okay, momentum trades on like the P1 trade. I call phase 1 of boomerang. Obviously, be careful on that at night when you don't expect big moves. Okay, so yeah, you may get a phase 1, you may get a phase 3. Phase 1s, I'm good with. Phase 3s, I'd be very careful on at night. So phase 1 is top of the hour. We exceed expectations. Okay, we have a buy. Like that's a phase 1 right there. And what does phase 1 mean? All it means is up close bar, top of hour, inside the close to close range. There we go. We just hit it. Perfect. And so right there, that's what we're looking for, is that exact contract. So you went in there and you're basically expecting it to move that expectation. It's moved it. You're done. That trade is over. So I'd be in the trade and out of the trade. I would not be looking for massive moves. You'll get them, okay, but not often. I would not be looking for massive moves outside of the expectation. What would I probably be looking for to happen right now in the US yen? What do you think would be a more realistic scenario? Right now in the US yen, what do you think I should expect? Should I expect it to take off and keep going? No, it's already moved the expected move, right? So I probably have a larger expectation that it would actually turn back around. Now, I'm not just going to take it just because it hit the range, because maybe this is one of those hours where it just goes. Okay, because we did have a big move there, a whole 6 ticks, right, where it took off. I'm going to make it come back around and break the low of this bar. The next bar breaks the low of that bar. Now I got a short trade, short in the money, P2 boomerang trade. Okay? So, you want to have that expectation. Now, some people will just take it. Now, that's called a classic boomerang. That's where it's like, hey, hit 75%, I'm going. And they're just going to go in and they're going to short it right now. Okay, as long as you're ready to get out quick, that's fine. It's not a trade based on greed. It's a trade based on, hey, the market hit its expectations. I don't expect it to go further. So it's not a horrible trade. All right, and then let's see here. So I got a question. This is sort of a side note here. I do a training sometimes about how to trade the Nikkei. Well, first, request it over in our forum, William. Second, verify with me that you're paying for live and historical data, which is going to cost you about $100 a month to get it. Okay? You can't use the NKD because Nadex is not following the CME. It's following the Singapore exchange. It's two different contracts. It's following the yen-based Singapore exchange, which has actual real volume, has liquid volume, volume that you can read. So if you try to trade the wrong contract, you're going to get the wrong information, and you're not going to be very happy. Trust me, we tried it. It didn't work. I said, don't use NK. So NKD there. Don't make sure whatever symbol it is you're using, but make sure you use the one that is on the Singapore exchange. But yeah, ask any questions you want over there. Be happy to help you out. Okay, so it's just everybody says they want to trade it because it's an indice that moves at night, but then nobody wants to pay for the data feed on it. So that's why I usually don't do a trading on it. I get like a list of like 15 people that are doing actually willing to get the data feeds and all about it. So, but just as a concept, it'll be like this training that'll tell everybody, hey, here's what you can do if you pay a bunch of money, and then people get upset. Okay, so we got volume, we got ranges, we got expectations, we got scalps. We talked about scalps. They don't necessarily have to be small moves. They could just be small amounts of time. And, you can just hop into trades early, but my preference is to wait for momentum to be going in the direction I'm going to trade. I'll give up some profit when I do that, but I'll give up a lot of losses by doing it as well. And this is just a lot of tips and tricks for nighttime trading. I hope it's helping you out here. Out of the money in the systems, both. Take your profits quickly. Okay, I mean, I'm going in for like $20 and I'm out. I'm not riding that out of the money binary to make, now I may go for like 30 if it's 2 ticks away or something, okay? But even then, I mean, the other day I went in, I did a trade, I took a profit $12 later, risked, $11 or whatever, and made $12, in, out, hit profit target, done. I'm going for base hits, especially nighttime traders need to really be largely focused on base hits, okay? Consistent base hits, very close, close to 1-to-1 risk reward. And I mean, you may have some that just knock it out of the park, but you want some of those, just base hits. Another strategy that a lot of people don't do at night that they, might want to check out. Let me open up this for you, and we'll open up US yen again. Okay, this is on 10-minute bars that I do this. We've only covered this on webinars. We don't have like an official release on this training yet. But it's really simple. We're just trading, let's say US yen or whatever. And what the strategy is basically if we get what's called an MVP arrow, which right now there's nothing happening, but let's say you get an MVP arrow. If the bar closes in the direction of the arrow and the next bar breaks its low or high, so if it's a down close, the next bar breaks its low, then we could have a sell. If it closes up and the next bar breaks its high, then we could have a buy. So for instance, like right here, we had an MVP long, and the high of the bar was 101.34. The high of that bar was 101.34, which is equal, so we don't do a trade. So that's the waiting on the momentum breakout of the trade. Let's see here. We do go for current hour. So go back, let's see if we can find one that does trigger. It's the same. It's so flat. So I really want to focus on the butterflies next week to give y'all something to do. Okay, so high 101.39, high 101.40. Okay, so here's an MVP up. It's an up close requirement. Okay, breaks the high. Trade expires and the money. Okay, there's a down close, breaks the low, trade expires, and the money. This is a down with an up close, no trade. Okay? Up with a down close, no trade. Down with an up close, no trade. Up with an up close, breaks the high, expires in the money. Meaning higher than where you got in right there. Going on over here. Down close, down MVP arrow, breaks the low, expires in the money. I mean, really simple. We do have an MVP strategy, which is a little more complex, but it's just by getting the closest in the money binary you can. It just has to close in that direction, and it has to break the high or the low. So there's a down close, up close with a down arrow, no trade. And notice how it trickled on up. And this just using on 10-minute bars. You could literally delete everything else off the chart. So it's pretty simple. So we have a lot of simple strategies like this that people don't take advantage of. But, master one at a time and just add on to the list. There's plenty of trades if you'll get... I guess this is one of the things, too. As nighttime traders, the market's not moving as much for you. Okay? And there's not as many markets. So you need to have multiple plays on multiple instruments that you can watch for simultaneously. It may be boomerangs, it may be P123s, it may be classics, maybe spike strikers, momentum scalps, MVP trades. All those are trades that you could actually be taking advantage of. And so by having up, say you have 5 instruments up, and you're watching, diagnostic charts, 5-minute charts, and 10-minute charts. We got alerts on like everything. You're getting all these alerts out of something. You're going to get either an expected volume alert from a momentum scalp or EPC or ETC. You're going to get like a spike striker alert from the spike happens. You're going to get an MVP alert from an MVP happens. I mean, there is more than enough just right there. Plus you add in the P1, P2, P3 trades, and you'll stay plenty busy. So there's an up close with an up arrow, but it did not break the high. That one, yeah, we just keep going again and again and again. But very, very simple trade. I mean, it takes you 5 minutes to learn. Let's see here. Really, any of the strategies will work well day or night. It's just going to be easier to find strikes. Obviously, the more premium there is, the closer it is. You just have to look. The one strategy to watch out for at night is P3s. That's the breakout trades, the ones that are like breaking out above the high. They can happen, but you better have the volume with it. So like right now, US yen still pushing up. It's still going, and but the volume is backing it up. See how the volume is exceeding expectations right now, and it's actually making more volume than the previous bar. That volume backs off. I'd be getting out, but on this one, I would have already taken profit on that trade. So it may keep going, but I'll be happy with the base hit. Let's see. Markets that are really slow. Euro pound. Okay? Certain markets are going to be extremely slow. It will be very painful to try to scalp. Obviously, things that move more, like Russell, gold, oil, euro yen a little bit, pound yen more often, pound dollar, US yen. Things that move a little bit more, you're probably going to enjoy trading more go for those decent little moves. Scalping is a binary strategy. It's not a spread strategy. Now, I do scalp futures and Forex using spreads as a hedge, but I don't scalp spreads. Obviously, you want to use the scanner and the simulator to find out when you do have a buy, what's the best contract to buy or sell. And let's see. Let me see what other questions we got. I think I wrapped up most of them, but I just want to make sure I got everybody's questions covered thoroughly. Let's see. I may have missed one or two, so I want to make sure I got them all. And scrolling through here, and then we'll wrap it on up. I got that one, got Condor spreads. At nighttime, if I'm going to trade the elite pattern, I'm going to trade it on time-based bars because it's too slow otherwise. I mean, it doesn't mean you can't do it. It's more of a futures thing, but I mean, you've got an elite trade right here, actually. I guess that's an E. So that's an E breakout right there on US yen. That's the first one you've got tonight. That's the first one you've got since 10 a.m. yesterday. Right? So US yen just doesn't move that much. That's on 4-tick bars. I'm more likely to go over and look at a smaller time frame chart. And let's see if I can find one for you. I already have opened up. Just think about it. The elite pattern is based on volume, right? So it's based on the order flow. The market's moving based on orders. It's a trend trading strategy. Now, if you're doing profit poppers on the elite pattern, awesome. Okay, that can be done anytime, day or night. That's really more my nighttime. I'm not necessarily going to go for big elite moves at night because I don't expect big moves at night. Now, I may go for big moves over longer periods of time. So I just am less likely to do it on right there. So let me go over here. I'll put this on. Throw the apex pattern on there. let's see how it's doing. Right. Got too many screens over here. One second. There we go. Okay. So the apex week pattern, put that on. And just, there could be so much little movement during time that it can make it very difficult to trade diagnostic bars for big trends at night. So now if I'm going for bigger moves and I'm willing to, trade longer time frames, then that can work out great. But let's see. Okay, so there we go. Zoom in a little bit on it. So yeah, so we actually also got the apex pattern right there. We're at the same time on the time-based bars. So it's just really squished together because of the way it's moving. It's going, though. Yeah, that volume is picking up heavy. So you can scalp anytime, day or night. I literally have traders that scalp all around the clock. So obviously you're going to get more scalps during, the Euro and 8. Like when there's more volume is when you're going to get more scalps. So, I mean, you just look at, if we back up, we look at like a 24-hour period, you can see pretty quick, when is the volume. It's going to pick up, around the Euro session. It's going to die off, a little bit later in the early afternoon. That's when you get more trades, but it doesn't mean you can't do it anytime, day or night. And it's one of the things I have to say over and over again, and eventually people hear it, is you get more trends, you get more volume, you get more movement when you have more orders. So the best time to trade for bigger moves is when there is trends and volume, not at night. So that doesn't mean you can't trade at night. It just means that there'll be smaller moves, and you just need to make sure you have a trading plan that will work accordingly with that. So what's my opinion of the charts on the Nadex platform? I think they're great go-to charts when you have nothing else available. I think it's awesome that they put them there so you can look at stuff, you can check out bid-ask. I like them more for actually looking at the binary or spread contract pricing themselves. I don't really use the indicatives at all, unless I'm looking like in the last few minutes and want to see how close the thing's going to be. But you need to use real charts, real platforms. You need to use an application on your computer with real data feed of the underlying market. It's not based on the indicative, so you should be using what it's a derivative. Look at the price it's derived from. So don't look at a call chart to trade an Apple call. Look at Apple, And I show you how to get that data for free. Let's see here. How do you choose stops on higher risk trades, the money scout, spike striker, etc.? The same way I choose all of them, Michael. I'll get out when it hits the strike. So $50, because that's the number that you always know. When does spike striker put the red or green marker on the end of a candle? It doesn't do that at all. So I'm not quite sure what you're looking for there, Rob. There is no green or red marker on a candle. Right now it's always blue. So I'm not quite sure what you mean. Let's see here. But we do have a course on it that'll walk you through exactly how it works step by step. Just make sure to check it out. And Tom, got you at best time of day. I mean, if you want to get a whole lot of them, then yeah, I'm going to trade during the day. If you want to be able to grab a few trades, I mean, there were a few right here. I mean, while we're staring at this, there's been tons of scalp trades. So I mean, look at all these. So it's right there, and that's just one. That's just one market. So there are plenty of other markets you can be trading. On the Apex, it's alert, pivot, entry, and then confirmation. So you basically be exiting right there if you're doing profit poppers, like right before that price. Complete. X marks the spot. Basically, the pattern is completed. It happens whenever the A is broken. Like the high of the A is broken on a long, or the low of the A is broken on a short. That's when the Apex pattern completes. All right, so I know that was just a lot of tips and tricks, and I hope the biggest thing you bring out of this is, one, you can trade at night. You can trade for an hour. You can trade for 2 hours. You can trade for 30 minutes. Obviously, the less amount of time you're going to trade, probably the more instruments you're going to want to have open. And you need to make sure you find strategies that simply expire within the time amount that you can trade. And then the other thing is make sure you don't just discount the out of the monies, and don't just always choose the in the monies. Look and see what the best price is based on the expectation of move you have, and make sure you have proper expectations on movement and volume, because that's going to help you out, especially if you're really trying to focus down and just to a couple hours a day on a few instruments. And I think that's what we got. Darby says Nadex doesn't show volume on their indicatives because it's an indicative. They're not charting the ES for you. They're charting the last 25 trades, not the last 25 volume. Okay, the last 25 trades. It could happen in the last millisecond. The average of the middle 15 has nothing to do with charting volume on ES. So, and you don't need volume on a derivative. It's a derivative. Its price is derived from something else. You just need to know there's liquidity, like a bid and an offer there, and what size it is, so you can know if you can get in and out of a trade. But you're not driving the ES. You're not driving the US 500, okay? You're not driving its price by you hopping in there and trading. Like, it's derived from the underlying market. So you don't need volume. So you need liquidity. Volume is what you need on the futures contract. And Nadex is its own exchange. It's not the CME. It can't give you the data on the CME. So there's, like, if you're looking at it, I don't know, like, tell me why. Like, why are you looking at it? If you can get it free, why are you looking at it on anything other than the actual underlying market? Because there's no good reason. All right, so I got one request. I'm going to wrap it up with this. Can you explain the MVP trade again? Yes, it's very simple. I just 10-minute bars, okay? And I look at the direction of the bar. Does it match the MVP arrow? And MVP means momentum volatility predictor, okay? So if it's an up close, and then it has to be a green. If it's a green bar, or green arrow, it has to be an up close, a green bar. If it's a red bar, it has to be a down close, a red bar. If it is, then if it's an up close, the high has to be broken. If it's a down close one, then the low has to be broken. End of hour, end the money expiration. Closest in the money I can get. That's pretty much it. So probably the only caution I would add into it is if you're if you get a signal like right at the top or bottom of an expected range, obviously, that means that the range is probably pretty burnt out and it probably is not going to keep going. So I'd use, caution then. But most of them don't actually happen that way. They happen somewhere in the middle. All right. I'm glad you learned a lot tonight, Scott, Jeff. And hopefully a few of y'all picked up, like I said, a few tips and tricks. I'm sure you're going to have some more questions. Hop over to our website, hop on our forum, and let me know what questions you got. I'll be glad to help you on any of these strategies, any ideas, any random questions you got. Just let me know, okay? Okay, y'all have a good evening. And again, tomorrow, just to remind, not tomorrow, but Monday, we are going to be covering specifically going into nighttime trading. Like today was part-time, okay? So we did some nighttime, some daytime, but specifically nighttime trading. We're going to really talk about doing butterflies on binaries. And talk about how to do them, like find the right ones quick, okay? The right ones for your trade. And so go to that whole premium collection. And we'll even touch on how to do iron condors with spreads at the same time. And that is going to be the entire focus of the webinar next week, okay? So these flat markets where nothing's happening, teach you how to, potentially make some profit when paint's dry in there for you, okay? All right, well, y'all have a great evening, and check us out. We will put the webinar up over at ApexInvesting.com in the free member area under Education Recorded Webinars. Or just go to the general forum. You'll see the most recent 4 webinars, and you'll see it posted up there once we got it up. All right, y'all have a great evening.